A mystery incident that rocked the financial world in recent days sent shockwaves through trading floors in New York and abroad. The world's most popular and reliable financial data system, Bloomberg terminals, abruptly showed something remarkable. For 47 seconds, traders worldwide saw an XRP price that was unattainable, $27,000. No one could quickly write it off as a simple mistake because the numbers flew across screens with such speed and precision. What was this? A glitch in the system, a strange coincidence, or something far more profound? A covert message from the center of Wall Street, perhaps, an early look at cryptocurrency's future. The incident first appeared to be a typical data error. There are sporadic glitches with Bloomberg terminals. Before changes are made, incorrect pricing may appear briefly. However, this was no typical error. An unidentified insider releasing a grainy screenshot from a large investment bank, along with the price's consistency across several terminals and locations, pointed to something far more intentional. Despite being anonymous, the individual who came forward alluded to a clandestine test by institutions and market makers, setting the stage for a significant rebalancing of the XRP price. This was a prophecy, not an error. We must investigate the background of this amount in order to completely comprehend why $27,000 showed up on those terminals. Bloomberg terminals draw from a network of interconnected market data, internal bank models, and predictive analytics, making them more than just data displays. Usually kept under wraps, these internal valuation models occasionally show the expectations of some of the biggest financial firms in the world. Discussions about the integration of digital currencies by central banks are increasingly entwined with XRP as a digital asset. A future in which XRP acts as a vital bridge asset in a new global liquidity infrastructure is beginning to be reflected in the bank's models. The currency of the future is central bank digital currencies, or CBDCs. In an effort to find quicker, more transparent, and safer ways to settle disputes, governments all over the world are rushing to digitize fiat money. The blockchain technology developed by XRP is in a unique position to help realize this goal. It provides the cost-effectiveness, scalability, and transaction speed needed to manage trillions in daily international settlements. The figure of $27,000 starts to make sense when pricing models take these capabilities into account. It makes sense given XRP's possible role in supporting the financial ecosystem of the future. It is not arbitrary. Now let's examine the calculations underlying this appraisal. With tens of trillions of dollars global liquidity, the total amount of money available for transactions, investments, and reserves is massive. XRP's market capitalization would have to grow rapidly in order for it to function as the settlement and bridge currency for this enormous system. These models take into account projections for adoption, network capacity, transaction speed, and current circulating supply. A target price of about $27,000 per XRP coin is revealed when banks run these figures. This number is in line with both the anticipated demand from international digital currency infrastructures and the capabilities of the technology. A live sneak peek of this future is provided by the Bloomberg glitch. A fundamental shift in the market is imminent, as seen by the way institutional players are starting to position themselves. The value proposition of XRP is evolving from a speculative asset to a necessary component of the financial system. There are significant ramifications to this change. It offers the possibility of previously unheard of rewards for investors. It signifies a shift in global finance toward a monetary system that is more integrated, effective, and transparent. A lot of investors are still dubious. Could this $27,000 price actually come to pass? They ask. Isn't this merely hype brought on by a faulty data feed? We need to look beyond speculative mania and transient price fluctuations in order to find answers to these issues. Rather, concentrate on the principles, adoption of technology, collaborations with the government, clarity of regulations, and practical applications. Large financial institutions throughout the world are already testing and integrating XRP. The Ripple, the company that created XRP, has contracts with numerous banks, payment processors, and financial associations. These collaborations are more than just promotional strategies. They are tangible steps toward widespread use and acceptance. The Bloomberg mistake also shows that financial markets are becoming more confident in XRP's ability to be a major player in the developing CBDC industry. Programs for digital currency are being piloted by the US government and other significant economies. Because of its transparent and programmable ledger technology, XRP is the go-to option for cross-border transfers and settlement layers, which are essential to the smooth operation of these digital economies. The value of XRP naturally rises as central banks cooperate with or adopt more XRP-based technology. But there are challenges along the way to $27,000. regulatory monitoring continues to be one of the most significant obstacles. The future of the XRP ecosystem is rather questionable because of the major legal disputes it has faced in recent years. These difficulties have nevertheless also strengthened resiliency and clarity. Clearer frameworks for digital assets and their incorporation into traditional finance are being found thanks to the ongoing legal proceedings. We anticipate a spike in institutional engagement following regulatory certainty, which will raise XRP's worth even more. The psychological effects of the Bloomberg incident must also be taken into account. Price swings are frequently driven as much by market emotion as by fundamentals. Excitation and conjecture swept over social media, trading forums, and investing circles when the price of XRP flashed $27,000 on the most reliable financial terminals in the world. FOMO, or the fear of missing out, is a strong force, and this incident has sparked a new discussion about XRP's potential like never before. What therefore ought to be the reaction of investors? While the secret is research and patience, although the markets will continue to be unpredictable, this moment marks an inflection point. It is much easier to distinguish between hype and truth when one is aware of the larger picture and the technical underpinnings of XRP. Investors should monitor collaborations, adoption milestones, and regulatory changes. Naturally, risk management and diversification are still crucial as the cryptocurrency market develops. From a macroeconomic standpoint, the incorporation of XRP into international financial institutions has the potential to significantly alter the cross-border flow of value. In addition to improving liquidity and lowering systemic risks in the financial system, faster, less expensive, and more transparent transactions would also save expenses for consumers and companies. These enhancements have the potential to spur additional economic expansion and innovation, establishing XRP as a key asset for many years to come. To sum up, the Bloomberg terminal malfunction was far more than a brief mishap. It served as a sort of preview of the future, giving the general public an idea of the expectations and valuations of some of the most significant financial organizations in the world. The $27,000 price tag reflects XRP's potential to serve as the foundation of digital finance in the future, driven by global liquidity demands and CBDC integration. A glimpse has been provided to the market. Now the question is, will you be prepared? Will you put yourself in a position to benefit from this paradigm change? Or will you have to watch history happen from the sidelines? Now is the moment to prepare, educate, and take action. We appreciate your participation in this in-depth analysis of one of the most remarkable developments in Bitcoin history. Please remember to like, subscribe, and enable notifications if you wish to stay up to date on these developments and participate in the discussion influencing the direction of finance. This is where your financial adventure begins. Keep yourself updated, alert, and most importantly, prepared. Disclaimer: please keep in mind that I am not a certified financial advisor. These videos' content is solely intended for viewing enjoyment. Before making any financial decisions, I always advise viewers to do their own research and speak with experts. Many thanks for listening. Please remember to hit the subscribe button and give the video a thumbs up if you liked it. To be the first to know when I post new stuff, make sure you have enabled the alerts as well. I can't wait to see you again in the next video. Be careful.